Hello and welcome, everybody. This is Chart Request Live. We do this show every Tuesday and Thursday at 1 o'clock Eastern Time, right here on Stock Market TV. I am joined today, as always, by Patrick Dunawilla of the Chart Report. How are you, Pat?
Steve, I'm doing fantastic. How are you?
Just great. So we have a situation here today where we're without producer. Spencer's gallivanting. He's off to the Berkshire Hathaway annual shareholder meeting.
Is that actually where he is?
How dare he? Yeah, I'm super jealous. So cool.
That's awesome.
So he's at Berkshire Hathaway. JC's at the Berkshires. So everybody's doing Berkshire things. And Patrick and I are left all alone, and we have no access to the mailbag. That's not entirely true, but we're not taking questions from the mailbag today for that reason. We will bump them to Tuesday. So we'll get them all then. But we're going full chat today, right, Pat?
Full chat. And you know what? I'm excited for it.
Full chat. So you guys got to bring it. And hopefully someone requests China, because I just really want to talk about China.
Let's see what you got. And Steve, go unfiltered today. If it's bad, say it's bad. If it's good, say it's good.
You know, I have been saying it's bad about China for so long now, Pat. This honestly feels weird. But right now, the way it looks to me is, and oh goodness, every time I pull up this chart, it's looking better and better. This is FXI putting in one of its best days over the past several years. This is a one-day rate of change up top, getting overbought, confirming, the price action here, really about to hit highs not seen since September of last year. But it's not about that. Let's flip it more to, let's look at the past 2 weeks. Let's look at a weekly. And this is exactly the kind of momentum I want with my breakout. So this is now the 2-week rate of change. You could do something like this for China, because you need a trend line break for a trend reversal, right?
Yeah.
And you're getting it. And then we're getting the best 2-week period since early last year. Now, what about China's leaders, right? That's FXI. This is China Technology, Invesco China Tech, CQQQ. Pat, 2 weeks, these last 2 weeks, and yes, I know, we still need to get through tomorrow. But if we close anywhere near where we are right now, this will be the second best 2-week period of all time. Only beat by, you remember all the Sigmas?
Right. Don't get me started with the Sigmas.
Right. So China had that crazy move just 2 years ago, I think. So that's what we're competing with here. Point being, this is initiation, right? This is exactly the kind of momentum that you want to see accompanying a trend line break like this. So I think, things are China has arrived, Pat. China's
I agree.
I'm so hot right now.
Listen, I'm seeing the same thing as you. This is the follow-through week. It really started last week. Last week was the best in quite a while, at least a year.
Yeah.
But you know what the cherry on top for this China trade is?
Tell me.
Sentiment. Everyone I talk to, I say, hey, what about China? You think China looks good here? Nobody even cares if it looks good. They're done with it. They're over it. There's too much risk there. Yeah, and that's usually where some of the best moves and bottoms start to form.
I couldn't agree more. Our friend of the show, Josh Brown, was just on doing his lunchtime gig on network television, and he was making the same point that you're making now, right? Usually,
Chinese stocks.
Talking about China and mentioning specifically the sentiment around China.
Yeah,
he was basically saying the sentiment is so bad that simply because I guess they've
been burned. I mean, it's no surprise. Like the people I'm talking to, they're just like, man, I got crushed in JD. I don't want to even look at Chinese stocks, things like that. So the pain's real.
What ends up happening is if sentiment gets so bad about something, you don't need much for prices to start rising.
Yeah,
right?
and that sparks the momentum, right? That sparks that kind of FOMO again.
And I guess so. The point here, and then let's move right along, is this is the kind of momentum that you want with a trend reversal or a new high or a trend line break, right? So
Absolutely.
this is as much information as you're going to get.
It's why coffee in. Would you agree?
For sure.
So let's segue. Somebody in the chat asked to see USD JPY. Just with all the craziness in the yen, bring it all back. Bring it. Maybe you can relate it to this. I think it was either on our spaces or something on Tuesday. Somebody mentioned long China, short Japan. What do you think of that? Getting too
Oh,
cute?
I told you what I think. I said I like long China, short India. I guess maybe Japan works too. Here's the thing, and here's why short Japan makes sense. USD JPY looks like it's reversing at a really logical level, and it's not just in USD. If you look at yen against any currency, right? So you got some sort of a resistance zone here, something like that. If you look at, hold on, Pat. Yen in any currency, it's running up against some very logical overhead supply levels. So I want to flip this back to the 1 day rate of change because you're seeing just wild volatility in yen right now. It's what I like to call turning point volatility, right? So we talked about how this is a logical level. We drew this resistance here. Now, when you zoom in, look at
I've
this
never heard you say that. Turning point volatility. I like it though. That's very
turning
good.
point volatility. It blows out in both directions, right? You tend to see momentum spikes in both directions at these key turning points. And then just look at these candles, right, Pat? I mean,
Yeah.
this is a currency. Two
Yeah,
different market
absolutely.
currencies, wild volatility, some downside follow through. I think maybe this is the yen's time to shine, right? And what does that mean for the Nikkei or Japanese stocks? Probably pressure, right? Just like a higher dollar puts pressure
What does
on
that mean for US stocks? Anything?
not much. Yeah, not much of a read. But here, just for me to make the point, we got the turning point volatility, right? This is Aussie yen. Aussie yen, biggest up day
And do you
since
want to talk about the significance of Aussie and why that pair?
it used to be a really, really traditional risk appetite barometer from the forex world. So I would liken Aussie yen, right? So you have Aussie as your offense, your risk on currency. Yen is your defense, traditionally a safe haven currency. Some would argue that's no longer the case. Um, so it's an offense versus defense ratio. Think of it as like the discretionary versus staples of the forex world, right? So higher Aussie risk on,
Now you said used to. Why is that?
risk
Not
off.
anymore.
The yen really just the carry trade is destroying the information that we used to get from it. It more or less moves with the bond market now. So when you zoom out, even on Aussie yen, Pat, I mean, look, it's just across the board uh, for these yen crosses right now, big levels and a lot of volatility. So when I see big levels like this and a ton of volatility, I think to myself, oops, what did I just do, Pat? Oh no, oh no. Yeah. So when I see big levels and big volatility, I think reversal or at least short-term peak, right? So I think this one odd JPY heads back in favor of yen. I think USD JPY, same thing.
I like it.
BOJ doing things, right? You can go read the news about that. That matters to some people too.
All right, let's move on to what you like in China, shall we? But we'll start with some of the requests. Let's do Baba, Baidu, PDD, JD. You can start with any of those.
All of them. Wow.
We'll do all of them if you want.
Should I leave the momentum up just to be obnoxiously clear about what's going on?
Yeah, yeah. You're saying the rate of change? Yeah.
Yeah. So rate of change actually is a momentum indicator. It seems stupid
It's
simple.
it's kind of the best momentum and they're the purest, simplest, I'd say.
Couldn't agree more. He took the words right out of my mouth. Yeah. So I got the 10-day rate of change on here just to, for some context. Biggest move in over a year, right, for Alibaba over the trailing 2 week period. Let me just remove these markups. I think you can zoom in on these charts for now. I think eventually we zoom out and we start drawing them like this, right? And we say, oh my gosh, look at this massive multi-year base, right, in Alibaba.
I would say this was kind of the poster child. Baba.
I'm dealing with some new Optima settings here, so excuse me. Appreciate everybody's patience for the slow markups today. What, Pat?
Baba was kind of the biggest or kind of the poster child of Chinese stocks. I mean, there was a period when they were that was the beta, right? Like Chinese
Yeah.
stocks, I think in 2021 were really strong. They were the first to peak. So there was a time when these were really hot stocks. It wasn't always just
They
down
were
and to the
great.
right.
They were great stocks. These, I mean, this is one of the hottest IPOs of all time. I think China has learned over time that it's not good policy to lock up the CEOs of your tech companies, right?
No kidding.
Yeah, right. So, I mean, we take things for granted here.
You're
So many.
absolutely right. Yeah.
Um, so I think that kind of whole situation is changing where they are warming up to the business community a little bit. I think China, or the CCP at least, is recognizing the fact that the stock market is important, and they need their companies to do well. That's very important to achieve the goals of the Communist Party, even, right? So I think maybe all of that is behind us now, and we can feel safer owning stocks like this. I think we talk about this reversal completing one day, but we want to be involved now. We have these trend line breaks all over the place when we zoom in, right? Similar to the one CQQQ or FXI. There's a little trend line break. We're above here. Little
Almost like
shelf.
a breakaway gap in terms of a trend line. I don't know if you can call a breakaway gap on a
It
trend
is
line.
monster breakaway gap. Wish I was involved. We're involved in JD, but I think you draw it like this. Let's see what the fib shows
So
us.
you are in JD.
Oh God, forget about it. Yeah, and then I think you just keep it simple and you use these pivot highs here.
Cool.
So 100. So that gives you 25%.
This one looks great. Let's move on to PDD.
Wow.
Now this one held up better than most, right?
Yeah, this is a market leader.
I know there was a time at least when yeah, for sure.
Oh, held up. I mean, this
I
one, the base
mean,
is already complete, right? Like this one's been working. We've been
and Steve, I know your fib tool is a little messed up, but it is right at the 61.8 right now.
all right. So this is the 61.8. I'm not going to draw it.
Yeah, right around there.
But you know what stands out more than anything to me here is
What's
that
up? The base retest?
no, we have this one's really good. This is a clear base that has already resolved higher, right? And you're right, a sweet retest. So the primary trend is already pointing upward in this one and has been for some time. Now, if you drop a VWAP from the year-to-date highs, we're ripping higher right through it.
Yeah.
Right. A little shake yesterday beneath it. And now
You're saying at this point, you're just looking for confirmation if you even need it.
right. Like the primary trend is higher. And now I think today's action is making it pretty clear that we're entering a new up leg within the context of the primary uptrend. So I think you get long right here and you trade it back to those highs, 210. The PDD is as good as anything from China. Let's just illustrate that quickly. So here's PDD relative to its China peers, right? It was at all-time highs just earlier this year, right? And then, some weakness, both relative and absolute terms so far this year. I love buying dips in the context of strong uptrends, right? And that's what PDD is. So this one is at the top of the watch list for China for sure.
All right, let's do JD and then we'll do Baidu and then we'll move away from Chinese stocks.
JD is very similar to Baba.
I really like JD here. Textbook head and shoulders there.
So if you guys are super interested in JD, go check out the flow show from this week. Sean and I went into great detail about it, and we outlined an option strategy to take advantage of the momentum that's already coming into this name. All right, so we've been long against this little base breakout level. This is a very tactical pattern.
You got the successful retest
within the context of a primary downtrend for now, right? So you are trading counter trend here, which is always important to be aware of. We are running also into a very big VWAP from the January highs of 2023. But I think over time, if you give this one a couple weeks, maybe a month or two, 41. These stocks, Pat, when they go, they go. They're going to need a period to digest the gains over the trailing 2 weeks. And then I would expect them to just ramp higher pretty quickly.
Yeah.
Really stands out.
All right, let's hit Baidu and then we'll move on to some American names.
again, I've been drawing these bases for so long. Pat, look, I'm just watching and waiting. So
It's like it's the same movie, right?
Baidu, I think we eventually draw it like this and say, oh my goodness, what a massive base in Baidu. We absolutely love this. Primary trend is now higher. It's not the case yet. Again, counter trend. So this is counter trend, but, and I feel like a broken record, I'm sorry, but it's so important. The trend line break shown here is really the first development of a trend reversal. Can't have a trend reversal without breaking a trend line, right? So that's in the books. Again, a key VWAP is coming into play here. Tactically, I don't like this one as much. It's not as clean as JD and Baba or
Yeah,
Pindout, right? Like, see what I'm dealing with here, Pat?
absolutely. Yeah.
We had clear tactical breakout levels from these multi-month bases and things like Baba and JD. JD is pretty clean. Let's show JD, right? So I know where I'm out. I know where I'm in. This is a really clean chart. With Baidu, not as much. And also it's lagging just the other mega cap tech peers. So I'm going to throw one more out right now. Look at Tencent. Looks very different, right? Breaking trend, already retraced a lot of this base here. And it's pretty damn close to the base breakout level. So I have them all marked up for these massive bases. I think you want the ones that are closest to completing. And 10 cents really right there, just a couple dollars away, $4 or $5 away. Base breakout level around 52 and 10 cent.
I
So
like it.
so
I like it.
Baidu's a no. Baidu's a no. No from me.
Let's move on to one. This one's been showing up on our scans lately. This one's from Robert XYL. Some of these water stocks
Xylem.
been showing strength. You can take a look at the ETF PHO, that has it's the water. Not I don't know if it's water utilities or water something. It's not utilities. It's
Are you eating enough pho? Out
I'm
in San
more of
Diego?
a ramen guy. More of a ramen guy. Probably
Really?
a little less healthy, but whatever.
Really?
Yeah.
Neither are particularly healthy.
Eh, not the worst thing you can eat, but
Not the worst. Phil Pearlman would say, "Oh my God, that's poison." Deep fee. Xylem, I only wanted above the prior cycle highs of 138.
yeah, I mean, beautiful
There.
structure, but like you said, it's very important that it sticks that landing.
You're right there. Let it break out. And also, it's a bit extended here.
All right, let's move on to one that I know you really like, interactive brokers.
Hmm.
You got an affinity bias for this one.
Shout out Greenwich, Connecticut. Why don't you explain to the people what an affinity bias is?
Affinity bias is when you like a particular stock because you maybe are a fan of their product or because you like the company for whatever sentimental reason might be. You know,
Mental?
if you're a huge fan of Apple products and you're super bullish Apple and you can only see through rose-colored glasses because you love Apple so much, that's affinity bias.
All right, Patrick's right. These guys have a special place in my heart. And it's about more than just this beautiful chart pattern, right? So you could draw this one.
It's okay. We all have them, but I think the important thing is to be aware of those biases uh,
So
and just asking yourself, do I like this because I like the chart, or do I like it because I've
so
always liked it?
when I graduated college and I was in college basically through the heart of the financial crisis, and people were not getting jobs out of the business school. So I bartended in between junior, senior year because the internships that were there were shitty. You know, you're going to like Northwestern Mutual to sell life insurance. So my first job when I graduated was not working for Interactive Brokers, but working at Interactive Brokers. The first office I ever walked into for my first job in my professional career was Interactive Brokers in Greenwich, Connecticut. So naturally, very special place in my heart. When I look at the chart, I like it even more, obviously. So I'm long this one for the long run. I use them also. I think they're great. I think
And you
they
know,
are
Steve,
broke.
it started stalling recently there, and that was the 161 extension, but it's just ripped right through there. I really thought it was going to consolidate here for longer. but it's just going.
When you're good, Pat.
When you're good, you're
This
good.
whole space right now is a place that you want to be involved in. So I'm talking about capital markets, broker dealers, and exchanges. Even the data companies, absolutely killing it.
Well, hey,
Right?
Robert also brought up HSBC. I don't know. I mean, that kind of fits with two themes. I don't
Not
know
the
if you want
capital
to take a look at
market.
that.
It's not that's banks.
Right.
I think you would much rather be in the capital market stuff. And Interactive Brokers is a leader within capital markets. So let's look at Interactive Brokers versus its peer group, which is just now breaking out. Look, been straight line higher since late 2021, about to get a big breakout in the books here.
I was
Maybe
going to say the party hasn't even started yet.
right. Maybe a little bit of give back here. But the point is, here's what the index looks like. Oops, it always does this. So this is Spider S&P Capital Markets. Not done yet, right? Breakout not in the books yet. And then you look at something like Interactive, breakouts in the books, and then some, right? We were buying it over here earlier this year. Double, I'm sorry, 50% higher since its lows just earlier this year. I
Let's
think, yeah.
let's stick with financials though. Do you want to just go to KRE and then we can kind of hit some smaller financials?
Yeah. I think you stay long Interactive Brokers. I don't think it's great from a tactical standpoint or for short-term trade right here. It's a little bit extended, but if it's something that you want to buy and hold and keep for the long term, that chart structure looks better than pretty much anything in its peer group right now.
Or like you always say, find a way to get into it, find a way to manage risk around it, you know?
Yeah, Interactive Brokers for me is kind of like Apple. I don't trade it. I own. So I'm a liar because I'm literally long a risk reversal right now into Apple earnings. I don't not trade it, but I prefer to own it. So KRE, look, you got some sort of a sloppy breakout close to completing from a primary trend standpoint, right? This is the base from a primary trend standpoint that needs to complete. So we're right there. Call it 49, call it 50, right? I want confirmation at this point because this one's been so messy.
Yeah.
And here's the important point about banks. As much as I've talked about them this year and I've traded them with mixed results, they're not the leaders. They're not market leaders. They're not even sector leaders, right? This is a catch-up trade. There's an element of cuteness to it. At least if you're not in the major banks, right? So the big six U.S. banks, they've been pretty damn good, right?
Right.
JP Wells, Goldman now, killing it.
Yeah.
The national banks, they've been good. The regionals and the community banks in the U.S., this is pretty much the worst industry group in financials still. I think it plays catch up. I think there's big opportunity here. But from a longer term trend following perspective, you want insurance, you want capital markets, you want pretty much anything but this to express a bullish thesis on financials. Big banks, I would say you could do. For KRE, if we're above 50, you got to be long all day. I think there's a lot of beta there, and there's probably a big catch-up trade to be made, but it's got to be above 50. And then you want to dive into the components and pick the best ones. All the charts look pretty similar to this, but you can find ones that are breaking out above the pivot highs from late last year, early this year. Those are really the ones that you want. Can I give you one example?
Yeah.
M&T Bank stands out.
MTB. That's our bank, Steve.
I love it. So you got the reversal. You're back above VWAP from prior cycle, right? This is the primary trend reversal. Then it moved right into like another little base, right? Like this.
Yeah. Almost like a little cup and handle.
It's clean. It's somewhat of a leader in the space. And you could buy this range resolution right at like 147.
You're saying if you had to buy regionals.
It's pretty actionable. No, I'm long.
Oh, okay.
Yeah. I jumped the breakout a couple, I guess, last week, right? And then it failed. So still long. We'll see.
Let's look at the largest financial out there. I don't know if we can really call it a financial. It is a financial. It is the largest in there, Berkshire.
Yeah.
And you're not kidding. Spencer's really on his way to the meeting, huh?
I wouldn't make that up. I think that's
awesome.
That's like a bucket list thing,
That's very cool. Yeah.
It's literally like a fair.
So wait, like if you own one share, aren't you technically invited or?
Yeah.
Of the A shares.
Absolutely. And I don't know if anyone can go. No, I think you have to own one share.
Which is what now? Like, is it the same?
Shares, it's 400.
Okay, so you just add. I wasn't sure if it was the same.
Yeah, no, they're not discriminating.
Okay.
I think if you either class of shares, I'm pretty sure you can go. Yeah. But it's like a fair, you know, they have like Dairy Queen booths and McDonald's or whatever else he eats and sitting up there eating candy bars, drinking Cokes and talking about the
Selling
market.
diabetes.
I mean, that's my kind of party. Yeah, selling diabetes. That's fantastic. Do you think he's long Wegovy or short?
I want to know if he actually eats McDonald's every day, because that is like,
He literally says that he does. I'm pretty
you
sure
don't even need to make Supersize the documentary. Just follow Warren Buffett around and
on
that's
the
it.
record saying that he does, and he drinks like 6 Cokes or something crazy.
Right.
But I'm not. Whatever. Who knows? I'm not a doctor or a scientist.
He is definitely not on the Perlman diet.
I mean, you could live to 100. I guess. I don't know if the soda and McDonald's helps you at that point, but maybe he's just got good genes. Who knows? 397, 398. Patterns like this tend not to complete in bull markets. What do I mean by that? This is a short-term top, at least the way I've drawn it up. It's a short-term top, but it's in the context of a beautiful primary uptrend here, right? So reversal patterns, by definition, tend to fail more often than they tend to complete, right? So this is a little reversal pattern within the context of a primary uptrend, a little failure here, and we start drawing it differently, and it becomes a continuation pattern, which makes sense. Why, Pat? Because we know that prices trend and trends persist, right? So we don't want to bet on trend reversals. We actually want to bet on the failure of trend reversals, especially when it's a shorter term trend reversal within the context of a longer term trend reversal that's pointing in the opposite direction.
Yeah, I think you phrased what you're talking about best in that tweet you had with Apple last week, where you said, if this is a bull market, do you really want to make the bet that this is a top in Apple, one of the largest, most important stocks? And this
Apple,
one, it's the same case, right? It's Berkshire.
and it's not. It's the same
In the sense that, like, you're probably not going to have a bull market that Berkshire doesn't participate in.
this is really a continuation pattern. People will scale. People will try and scare you and draw it as a short term top on Twitter, right? But this is really just continuation. It should be drawn this way as a little range
Right.
with the context of primary uptrend. Apple really, honestly, should be drawn as a top right now, right? Like so
Well,
that's
so it is a topping pattern. The point is those patterns do fail. Or it should, yeah.
Apple's longer term, right? And then so I love this topic, and I just want to just riff for a second on it, right? So like, do you want to bet that a little double top like this and one of the greatest innovating companies in the history of the world is going to complete in the context of a pretty sweet bull market? I think that's crazy, right? And then we can show other examples like Disney, one of the great American brands. Look at this monster distribution pattern. Did you want to make the bet that Disney was going to break down to like fresh decade-long lows while risk assets all around the world are ripping and doing great? And the US,
but I also don't want to buy that chart. That looks like a headache.
No, you buy Disney right here at the low pounds, 82. And I mean, look at it now. Here, Pfizer, one of the longest standing drug companies in the United States, maybe the longest. Do you really think?
So our friend was giving you a little pushback here on this one. So now's your chance to tell him why he's wrong. So he was saying, Steve, this, you're saying it's not a top, but it's down 80 something percent.
What is?
Pfizer. What is it down? 54. Okay.
Right. So what's your time frame? Right. This is a structural top. There's no other way to describe this. I think what his point is that, the top that a trader wanted was here.
Right.
They're not trading at all. Yeah.
That's a good answer.
Can there not be tops within tops? Absolutely. So that was a top, and this is an even bigger top, right?
Yeah. Are you down to move on?
Yeah, but you buy these patterns in bull markets, period.
Well said. Let's go on to
Pfizer
Reuters, TRI, making a huge move today.
Pfizer absolutely blew it so bad on the pandemic. Sorry, I'm stuck on it. That now when they report their earnings, they literally treat the COVID or pandemic, business line as if it's like a completely separate business operation.
Do you think there's a time when it does spin that off?
It's like when the US dollar is too strong, like they're always doing X something. Whatever's no good, it's currency translation, right? X this, X extraordinary items. That's just like accounting tricks 101. So now Pfizer is doing X COVID, like X
Oh boy.
Yeah.
Well, so with Pfizer, I mean, what I always think of when I see this is how difficult it is to trade fundamentals or to trade news. Because if you had told me during the pandemic that Pfizer was going to come out with the vaccine, and most people were going to take it, I would have thought this thing, just shooting up. But if you told me that here we are in 2024, it's down 50% still. I mean, that's just goes to show that if you're not paying attention to the trend, it's really tough.
I don't know. What's next?
All right. Let's move on to Lin. Lin.
So this is the largest in the world of materials. What a great stock to own over longer time frames. Terrible stock to own recently. So this is a weekly chart. We got
so it gapped down on earnings today. Looks like this morning.
Yeah. Here's the thing. It's not about Lind for me. This is not a pond that I want to be throwing fresh lines into right now.
Materials.
Right? So this is XLB. Lind is the largest component of XLB, I'm pretty sure. This is XLB. Trapped beneath overhead supply. I couldn't get the breakout done, right? So, and I'll just be obnoxious about it. Here's copper miners. Trapped below overhead supply here. Couldn't get the breakout done. Right? Here's steel miners or steel producers. Beneath overhead supply, can't get the breakout.
And I can't tell you how many times I thought SLX was breaking out over the past year.
Here's chemicals, which I think is probably more relevant to Lind. Not even close to getting the breakout done. And this is mostly Lind, right? Down 4% today because it's the largest component. So this is NASDAQ large cap chemicals. It's just not a pond that we want to be fishing in right now. Lind is the leader. So I think eventually you buy this dip, you're going to want to buy it on strength, not buy it when it feels like you're definitely trying to catch a falling knife here. What I will say though, Pat, is this is a big level. I remember laughing about this level on this show.
Yeah.
Because we had this crazy candle.
Yeah.
A gap above it, then right back to it. So we're back here. If we start to stabilize and you get a little chop in here, right? Something like this. And then maybe we can go higher, right? But
yeah.
Let the dust kind of settle.
Maybe look for a bullish momentum divergence, something like that. Some sort of sign that it's kind of the bears are losing steam.
A 6% downside gap is pretty significant in a name this big. This is a pretty large company. Let's just
no signs of reversal yet. I mean, it's just, kind of barely off the lows of the days.
So here, to illustrate that point, not only is momentum at maybe its lowest level of all time, sub 20, one of its lowest levels is daily momentum of all time.
Yeah, it looks like lowest since 2015.
But this is the worst day for this company since COVID, right? Since the pandemic lows. So let it settle. Let it settle. It's a lot of downside momentum.
Yeah, for sure. Let's do Wavy's pick, MPW.
I know this one.
Another listener said courageous chart, my friend, to MPW.
Yeah, I mean, what are you trying to do with this, Wavy?
MPW just bottom. Please take a look. Pull the chart all the way back.
Okay.
Thanks.
All right. Oh, you sicko, Wavy.
Trading the financial crisis lows here.
Oh, what a freak. Yep. Listen, I don't hate it. Don't hate it. I can see it. Bottom. Tell me the market doesn't have memory going back 15 years.
I see what Dawson meant here about courageous chart.
I mean, tell me the market doesn't remember where it came from.
Right.
Why we do this. The most important principle of technical analysis is something called polarity. It's that former resistance tends to act as support in the future, and vice versa. Former support tends to act as resistance in the future, right?
Yeah.
It all means that levels tend to be tested over and over and over and over again, and there's price memory. So we're seeing this stock, which is sounds like medical REIT, which, gosh, I just don't love, bottoming at $3, the same price that it bottomed at in March of 2009 during the Great Financial Crisis. Now, just to illustrate how much sellers are in control of this name, let's drop a VWAP from the January 2022 highs. I don't know what's going on here. This is some sort of
they're like standard deviations. Yeah.
Sort of standard deviation volatility fan of my VWAP. Point is, this is the VWAP here in blue. Not even close. Sellers are absolutely dominating. I think you can get cute and tactical if you can, define a clear level to trade against. Maybe that's some sort of short-term pattern like this. But for me, I think wavy, you really need to see more. This, to me, looks like a real headache and a lot of opportunity costs, right? I'm not even seeing a tactical bottom here. I would start to think about a tactical bottom above 5.5 here, right? And we're trading at about 4 3/4 today. So 550 on a breakout, trade it for a double back above 10. I'm on board with that. Maybe this is one you put on your watch list and stuff away for another day for now. But I want to see more here, right? So I'm talking about the short-term base. I knew I drew the big one, but this is really what I want to see complete. I think you could buy strength and a resolution of this short-term trend reversal right here.
I like it. Let's just hit a couple more and then we'll shut it down because I know we're running over.
Two more.
Yeah. Let's do a name you and I were looking at a couple weeks ago, TKO, former WWE.
We just continue to talk about these great American businesses that were founded in my backyard.
So they also had some insider activity recently, right? Some purchasing or
Big Vince?
Yeah, I haven't been following the whole saga much. Big Vince.
No, it wasn't Big Vince. It was somebody else. We had a.
Well, I think he sold a large amount, or maybe he had to, something like that.
I think.
It's probably that.
Yeah, I think he was forced to sell a lot. Yeah. So I don't pay attention. I stopped watching wrestling probably about 20 years ago.
You don't watch WWE anymore, Steve?
No, but you know what? I got to be honest. I have too many friends who work in Stanford at WWE, and I'm so informed. I'm fully informed. Oh God, Pat. My friends, we think we have a lot of Twitter followers talking about charts. I'll send you my friend's Twitter account about wrestling.
And they're what, talking about WWE?
Talking about WWE, holding spaces about WWE, like they're hardcore. It's a whole thing. It's, they have their own world. They go to WrestleMania every year. They love it. They have like full families and children, and they're still doing it. So kudos to them, hardcore fans. But so WWE, these guys, the McMahons are from Stanford, Greenwich, Connecticut. And the headquarters is still right off of I-95 in Stanford. Actually just got like a sweet new sign. It looks so cool from the highway. Anybody from Connecticut knows what I'm talking about. You got to be long this all day above 98. So what this chart is doing is it's bringing in the WWE price history, okay, because this was a merger. So a lot of people their stock in WWE became TKO, right? So if you're a holder of TKO stock now, and you bought WWE 5-10 years ago, this is your price memory here, which I like this. I like when chart platforms do this. I think it's the right thing to do, right? When it's a stock deal, not a cash. 100, it's $100 roll. So yeah, use 100. got to be long all day. This,
You almost call that a handle or something.
yeah. And here, what I really like about it is the shorter term trend clearly already reversed,
Yeah.
right? So maybe this takes time. Yeah, maybe this takes time. 100's a big level, blah blah blah, right? But on strength above 100, I think we probably just blast right through this price history here, because when you zoom out, the bigger levels definitely 100.
I love it.
And we're above any VWAP. If I dropped any VWAP, we're above it.
Yeah. I want to hit service now, Vertiv, and then lead us out with some levels to watch for Apple earnings tonight.
So I said 2 more.
Yeah, 3. Well, listen, I think both are interesting. I think service now is at a really interesting point. Former leader.
Yeah.
And then Vertiv, when you see that chart, you'll see what I mean.
I don't know what show we talked about it on, but if you pay attention to what I'm doing, you know how much I like this one. I dip my toes in. I am long. This is one I wanted to be long and just didn't really, I don't know, pull the trigger at the right time last year. But I've had it on my watch list for so long. How can you not buy this, Pat? Right? If this is that you're watching and you like and you're trying to get into, are you gonna get a better opportunity than this? So I'm in slightly below where I want it to be. I'm going to use these pivot lows from late last year as my stop. And on strength, back above the 700 level, I'll probably buy more and finish my position.
I mean, if you zoom all the way out, like maybe in a weekly real quick, just to show how
stock.
Yeah, I mean, and you rarely get this kind of 2-year base breakout like this. I mean, if this holds, then it's a gift. If it fails, that's ugly. But if I was a betting man.
This is cloud, this is AI. They have a big partnership with NVIDIA, and this is the relative trend versus large cap stocks, right? So there is some damage to repair. I think you treat stocks like this, like Pat just had me zoom out to show the structural trend. You treat these stocks as innocent until proven guilty. But again, in both the absolute and relative trend, we have some damage to repair. I think you want to be responsible, but also patient.
Cool. Vertiv and then Apple, and then we're done.
Yeah, I know you like this one. You want to take this?
I know, man. So we've been long this one since the base breakout. I mean, I say long, but kind of trading in and out of it. And it's just continuing to impress me. I mean, it's insane.
How do you think about how I have my fibs strong?
Wait, so what happened? Your fibs are working now.
No, this was just, it's a whole thing. We're always doing stuff with these guys. Rejigging.
Wow.
We share.
I mean, if you don't believe in fibs.
The fibs are great, but this is on a weekly closing basis. So you probably don't have them drawn this way, do you?
No, I don't, but they're similar. I have it high low, but very similar.
Remember when we did that educational bit about you could draw them from intraday high lows, you could draw them from intra-week high lows.
Yep.
The same. Draw them from daily closing highs and lows, weekly closing highs and lows, and you kind of build out a range.
Right. Well,
94.
Yeah.
We've reacted to it for now, for 2 weeks.
That's it. So what do you do here?
You stay long, trends like this for as long as you can. Everyone's different, right? So you obviously want to have some sort of point where you're out and you're done. That might be here at 85 for somebody. It might be down here at the pivot lows of 71 for somebody else. Listen, if you've been in this since the base breakout at 15, I don't know. Where do you put your stop, Pat?
So at this point, maybe you put it at 260. Yeah, I was going to say. But even that's like you're inviting a 40% drawdown or something like that before you get out.
But where you came from and where you entered matters, right? Remember a conversation with Pers on Spaces this week? And I asked him, I'm like, what kind of a drawdown will you tolerate? And he's like, well, depend. Like, am I up 5 minutes? Am I up 5 minutes or did I just enter? Right? So everybody's different. I think you have levels here, but this is a trend that you kind of want to give some room. Dance. You want to let these.
Steve, awesome job as always. But real quick, it was Robert in the chat. I think this is a good question to lead us out with. Not asking for fortune telling, but what levels to what levels look best? So best and worst case for Apple. Give us some levels to watch after earnings today.
It hasn't changed.
And I mean, just caveat,
No, it hasn't changed. It's not about that.
Sure.
You don't trade. No, I'm making a bet that a double top is not going to complete an Apple in the context of a bull market, right? For the broader U.S. equity market. I'm making a bet.
I guess what he's asking though is if this thing gaps higher tomorrow, where would you expect to maybe see some short-term resistance?
Oh, right here. Listen, it's going to be muted. The market's already priced in a miss and a weak one. Yeah. Stock's down 15% this quarter.
Yeah.
So market's pricing in a miss, but the market's not always perfect, right? It's a fantastic discounting mechanism, but it's not always right. At what point do you say, who cares about a 3-month period that maybe Apple didn't do so great in, at least compared to its historical comps, and you look through or look beyond that to September or October of this year and some sort of AI phone upgrade cycle that will be very material to their business, right? So slight miss, great. It really depends on like the broader market. What's the tape like tomorrow is what I want to know before I tell you how Apple trades tomorrow. If it's a sweet tape and everything's green, Apple's going to report a miss and be higher. Easy, right? If everything's getting crushed tomorrow and it's like a broad market sell-off and they report a slight miss, maybe the stock's a little bit lower. I'm short puts against this level, these pivot lows. I don't think we break here, right? I think you got a level here around 166, and you got the real pivot lows around 164. I'm more anticipating an upside reaction. I think you probably run into resistance right here around 178, 179. You're not going to get fireworks. You're not going to get fireworks at all.
Yeah. And Steve, coming into this week, I can't tell you how many times I heard it's going to be a big week. It's going to be a big week. There's tons of data. That's true. But on those weeks, how poetic would it be if we just end flat? And I've seen it happen plenty of times where big weeks or what's supposed to be a big week turns into a big ol' nothing burger. It's like it all cancels out.
I wouldn't be surprised if you see some sort of positive reaction from Apple tomorrow and we don't even take out VWAP from pivot highs. I'm expecting very little, which is why I'm long options into it. So,
I like it.
I have a tea time in like literally 18 minutes. Can we shut this thing down? Is that okay with you?
Well, yeah. Thank you guys all. Robert, Adam, Brian, Wavy as always, One Hole, Troy, all you guys, Nicholas, thank you guys so much for coming. We'll be back on Tuesday. Steve?
This was great. Thank you, everybody. No morning show tomorrow. So join us next week for all of our regularly scheduled shows. Be safe out there. Patrick, I was going to say you're on the charts on Tuesday, but you're not. So, about it.
All right. Hit them straight. I'll see you.
Thanks, everybody, for joining.